Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report. Today is Wednesday, August 31st, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Obviously, what we mentioned yesterday was mostly basically that price could be rather quiet. The trading range could be rather quiet throughout most of the week. There's only a couple of catalysts that we could see for the market, mainly Wednesday is crude oil inventories. There's Chicago PMI, I believe, pending home sales. So there might be a little bit of activity here Wednesday, but uh, basically everybody's looking to Friday. That's non-farm payroll. So we could be trading rather quietly heading into that number. We are heading into a holiday weekend. Again, keep that in mind. A lot of folks may already be away from the desk this week or starting to tailor off as the week progresses. So just keep that in mind. Right now, really the charts, it's still a lot of blah. There's really not a lot to love about this right now. There's nothing to say really with regards to trade ideas for on a swing basis. I still believe that we are trending up. Every pullback has been a buying opportunity here. This one's slower so, but for the most part, this thing has been trending up ever since we really pushed through that 2104. We've never really given it up. We've been mostly trading in a range though, and so at some point you would expect the price to come down to the other side of the range and perhaps come back up. So, it's anybody's ball game as to what could happen here. Obviously, once non-farm payroll comes Friday morning, pre-market, we could have a fairly active Friday that could give us a little bit more direction. But right now, we are clearly within the range. Taking a look here, let's look at the intraday time frame. All right, here's the intraday time frame. Again, another very, very quiet overnight trade. 2172 half up to 2176. That's it. That's the range. 3.5 points so far. Very, very tiny compared to average. Average daily range over the 10-day basis has been about 14, almost 15 points, and right now we have under 4 points as the overnight range. So this thing is very, very quiet. That's only 25% of its average as we head into Wednesday's session. For the most part, in terms of levels, the 2170 level is very important, 2167 very important. So that zone is what we talked about in the trading room yesterday as being important. So if price were to come into that area, we thought bulls would want to defend. 2167 being the previous week's close, and 2170 just being the key level from where previous support turned resistance occurred. So that zone did hold, and yesterday afternoon, and now we're holding above it. So right now, the expectation is as long as they hold above these 67s here, bulls have a little bit of an upper hand. Failure to hold 67 opens up a clear path to 57. All right, let's take a look at crude oil. Let's go to the daily time frame of crude oil. And this one right here, really what you've seen is more weakness out of crude oil. It had a chance to kind of hold and easily broke down through support and started to continue downward here over the last couple of days. It all really came about right here, right there at that moment, because we had a huge squeeze day that we were anticipating. But once price hit that level right there, which is the same previous low here, after stops went off and defended, that level was the last level to be seen before we dropped, and that was Friday. And if you recall Friday, I actually tweeted out a video from the premium trading room during that time, and that was the level right there where we said, hey, look at this right here. That may be why we stopped. We could see a reversal from here, and 4 days later, much bigger move than anticipated right away, but the big time move, and look where we are right there at value, finally, between 45.60 and 45.88. That was very important. That's where I mentioned that if this price goes offered here and these bears defend, the likely move is to value. But they never got there. They came short of it, and then they retested that low before hitting value. So this is going to be very important. Usually when price hits value, it goes through it into the next LVN or key level. So we could see move into 45s before a bounce occurs back to 46.50. And then we may see some chop around value because that's where the market wants to trade it. So just keep that in mind. Again, we have crude oil inventories today. That will tell us a lot. Right now, anything above 46.50 would be important for the bulls. Taking a look at the intraday time frame. Here it is. Basically, we had that major sell-off after price failed to hold 47.25, 47.20. Price bounced here. This 46.70 was very important in the trading room. As soon as price got just below 46.70, I said this is the key level we have to watch now. And when price never got back above it, we were looking for more weakness. I mentioned if price comes back to it, that's the area to sell and defend for another round of weakness into value. So that trade has been completed now into value, and now we just have to watch how it plays out. Again, if we're going to see how this thing plays out, you got to see price push back above at least 46.42, and again, it has to get back above 46.70 to have any consequence to get back higher. Right now, we're just trending downward, and I think the next downside key level could be the 45s. All right, let's take a look now at gold futures. All right, here's gold futures. This is a daily time frame here. You can see we've almost made it down to that major area of support. We talked yesterday about the minor absorption signature that was building, but I said I really didn't believe that one, and I think it's a much better opportunity to wait until price gets lower into 1306 to 1310. So right now, you can see that was a good idea here, especially after the stops went offered here late in the session, held down there, and then prices retesting previous support, because yesterday in the trading room I had 1321 as a key level. One of our traders had 1320. That made for a very, very powerful zone of confluence there, and overnight you can see prices have already been defended off that level, which implies more weakness likely into the next downside zone, which would be 1306. Keep in mind there's a significant LV in there, one that the market has been watching for a while. But because we've had so much trading range action, I'd watch for it to reject, because there's no rule that says it has to reject. So you just watch for it to reject, see how it plays out in this zone. If bulls come in, and we know how those signatures look, if those bulls do come in, that could be a great spot to begin looking for that next 70, 60 handle rally. Now, if there's any failure to hold 1306, the next levels down are going to be 1250 and 1226, 1228. So that zone, those are the next two major levels down. So there's clear error to those targets if prices cannot hold 1306. But right now, primary idea is that that zone holds for another reversal back up. All right, let's take a look at the NQ now. Here's the NQ impulse range that we got the previous Friday, still in effect. So right here, very nice key range, still in play. Prices have been trading within that Friday range to begin the week so far. We also have a very clear area of support, 47.60. You also have the top up here, and that's 48.36. Very clear trading range right here. The expectation is for bulls to keep 47.60 bid for a push back toward 48.20. Any failure to hold that zone opens up a return back to two key levels. First 47.30 and then 46.90. Let's take a look at the intraday time frame for a moment. All right, on an intraday basis right now, we hit a couple of key levels. The first one right there was that 47.60 level. That was very, very important, and immediately price bounced off that level. That's been a key level for us for a while. You can see how bulls like that level right now. Every time he comes into it, here's 47.60. Boom, right? Boom, right here, boom. So there's always at least 20 handles out of that bounce, at least. This time right here, it actually extended much, much bigger to about 45 handles. So big time moves here that level has seen. Right now we're forming kind of an inverted head and shoulder type of pattern here, here, and here. Horizontal neckline at 47.80. The absorption signature is occurring off to the right. between 47.68 and 47.70. So right now, if you're a bull and you think this 47.60 is holding, you want to defend right here, about right where we are, and look to rotate into 47.80 and eventually look for the break through 47.80, because a break through this zone with this pattern suggests a move back to 47.98 half at the very least. And so we'll see how that plays out right now. But this is the absorption signature. Any failure to hold 47.68 opens up around the new lows. So this is the level that is the precise level right now that bulls are currently using as an absorption point for a shot at running the stops through 47.80 and into the top of the previous move, 4,800. All right, let's see how this thing plays out heading into the rest of the session. Good luck and trade well.